Good evening, traders. How are you today? I hope that you're getting along well and trading successfully. And today, me and my colleague Zainab will bring you yet another topic on how to do price action trading using smart money concept. So, Zainab, hey, how are you?
Hello, Matthew. It's a pleasure to be here today. Good evening, traders. Hope you're well and ready to learn.
Awesome,
Yes,
awesome.
Matthew.
Yeah, so we are right into it. And I see Apollo is here saying hi. Hey, Apollo, and everyone who is here with us. Now, I think, Zain, you can take us through the presentation and then I can look at the charts later on, right?
Yes, yes.
Okay, so let's go and let's get along, define some concepts here and there.
So today we are looking at how to trade using price action with smart money concept. So we'll have this definition of key terms. So the first term is price action. What does it mean? What is price action? So it's an analysis of the basic movement of asset prices in candlesticks. Price action analysis mostly does not involve indicators. Traders get optimal entries using candlestick chart pattern. So the next term is smart money concept, or in other words, SMC. Smart money in Forex means movement formed in the market due to actions of traders with deep market knowledge, not common with retail traders. Smart money concept is based on supply, demand, market structure, and order flows. SMC traders target to buy low, sell high on the market structure.
Awesome, awesome. So that's basically it. This is what we're trying to put all together. And I can see here the setups, the sell setup, yeah? Look at the best place to sell, the best place to buy. So in whatever you're looking at here, mostly the traders, when they're trading the breakout, they just enter on the first breakout, wait for a little bit confirmation before the price moves back again and takes the stop losses. Yeah. And same case for the buyers, they entering a little bit quite early. So the problem is not that the traders cannot find the entry, it's not that they cannot understand the movement of the markets or the trend which is in the market and the trends to take. Quite easily, everyone knows this is an uptrend, and if the trend changes to the downside, I'm looking to sell. This is a downtrend, and if the price changes to the upside, I'm looking to buy. But then which is the best place to buy, right? Because once you enter a trade and it hits a stop loss, then everyone tends to refrain, of course, from the concept of if you make a loss, then take some time, analyze what's happening, and then you can enter again. Yeah, that's what usually happens, even on your side, Zain, right? When someone enters a trade, you lose, you say some patience because you want to look for another better entry. Yeah.
Yes.
Yeah, for sure. So let's look at examples on chart. I want to look at examples based on this structure that we have here, and then we look at specifically on the market structure. So remember, it's very hard to know the actual supply area and the actual demand area, because that's where the big banks are entering, the big institutions are entering the market. And mostly when they are entering those orders, it's like kind of hidden. Yeah, they enter them in like the form of icebergs. That is very little, it's distributed such that it's very hard for retail traders to understand. So that's why we're trying to find where they are, and we use the market structure. I'll just give two examples here on the charts, and that will kind of give us the idea and what we're supposed to be looking at. All right, so I'll go to the MT5. I hope everyone can see the MT5. Zain, you can see it from your end?
Yes,
Is it clear?
yes, I can see it. It's clear.
Okay. So I don't know about the traders. Hey, trap scale. Can you see the chart? Just give me a yes. You can see it. You can see the chart, right? Okay, I can see it on my end, but I'm not sure whether the traders are able to see it clearly. But hopefully it's clear on your end as well. So let's start with New Zealand USD and the smart money concepts. When you're applying the smart money concepts, mostly you're not using the charts. Sorry, you're not using the indicators. It is just the candlesticks and clean charts, just like you're looking at it. And now you're combining the price action. Remember, we've just had Zainab told us that price action is just the basic movement of asset prices in candlesticks. And price action mostly does not involve indicators. You're looking for optimal entries, optimal sell positions, optimal buy positions using the candlestick chart pattern. So how can you combine that with the deeper knowledge of what might be happening in the market? Of course, using the market structure to find good entries. And that's what we are on to. So this is the price action. You're looking at the price movements. There's no indicator here, but now you have to try understand what's really happening. And I'll look at one simple concept that traders mostly use. Thanks so much, Apollo. I see a yes. I now know that you're seeing it clearly. So the most commonly used approach in the market is you have a trend and then you're trading out on the breakouts. So it becomes very tricky mostly. Now, on my New Zealand USD, right? New Zealand USD on my chart, I want to just highlight things which you can see here. We have a resistance here, and then down here we have a support, and then there was a breakout. This one could have happened pretty much well for the retail traders who are not using smart concepts, because right after this breakout, then of course you can see at the breakout here, a little bit retest and the price just went down. That one was a wow, a nice entry. But look here, down here we have a consolidation as well. Price is consolidating here. It hit a double bottom. That is what, of course, retail traders will see. And yeah, for sure, it's a double bottom. Yeah, price has not been able to break through this area. But then look at it this way. The price went up, right? Price went up. So this is a breakout at this point. So mostly you will have traders entering at around this area here. Once you find the breakout, you enter there and then have your stop loss somewhere around the first. If you go to a lower time frame, you realize that you have the first pullback or the first, the best area. If you're looking to have a tight stop loss, then one would have it around this level, right? Because that's where you can see previously there was some support and then it's turning again to be a support. So this is where you'd have traders putting a tight stop loss around this area. Yeah, but for the trader who would put their stop loss far away, a little bit longer distance, which is now taking a very big risk, they will have it at which zone? Let me insert, let me change the color of this line. So let me have this one as yellow, if you allow me. Changes to around, it's going to be yellow. Okay, yeah. So this would be the best place to have a tight stop loss because previously turned, it's a support just turned again as a support area. Then we had a candlestick pulling back to this area. So retail trader who doesn't know smart money concepts, we just enter the trader initially at the break at this level where I have that gray mark at that breakout, and then have the stop loss down here. And after some time, you can see there is a pullback again. It's a pullback to this area, probably takes out that stop loss before before you have a very strong rally to the upside. So when you're using the smart money concepts, then you're looking for you're looking for a very nice entry which has got a lower risk, right? And in this case, it is waiting for this retest, right? So let me go back to the setup which you had on the PPT or on the presentation. Here it is. So in this case, we're looking for a buy. So they're looking for a buy. It's always good, whether you're in a consolidation, because in this case, we don't have a consolidation, whether you're in a consolidation or a downtrend, like the one that we're seeing here. Let me use something to mark. Here we have, you see that's a downtrend. And then right at this break here is where you have many traders entering because there's a break of this trend. Even the ones who know higher highs and lower lows, you will still get a bad entry if you don't know the smart money concept. So even if it's a consolidation like this, then whenever you have a break to the upside, it is not good that you enter on the first breakout. Always wait for a retest, which is either going to be we are going to have this is going to be a mitigation. We call it mitigation, but that's something for another day. So once you have the price pulling back a little bit, then you get a better entry with a smaller risk and a likely higher reward, right? That's what we're looking for. So going back to the charts, this is a similar scenario that we have here. Remember, well, let me clear all the drawings. Let's clear my drawings. All right. Remember, what we're looking for here is the best entry with the lowest possible risk and then a higher reward. And in this case, once you have this pullback a little bit, then it can either be filled at the 50% level of this move that we have here, right? This move that we have here. You can either have that, this pullback. We can have this pullback all the way either at the 50% level, can be 50% level of this move, or it can even go lower to around, let's say even 61.8%. So mostly this one will align with, for the retail traders, will align with the Fibonacci levels. Now, when you go deeper to the smart money concept, you'll start again finding that if you consider this move from that point to this point, this upward move, then anything below the 50% down here is what will be called as discount. Yeah, this is discount. And remember, when Zainab was doing the presentation, you told us about the buying low and selling high. Yeah.
Yes.
So
yes,
mostly
ma'am.
we're talking about, yeah. So when we're talking about buying low, it means you're buying when the price moves to the discount level. But that one will depend with the how much the pullback will be, and then where you have the mitigation falling all the way to, right? And then you have a good entry around this point. That one springs all the way to the upside. You can find that good reward all the way to the upside. Past the previous high, when it breaks the previous high, then you should have your targets already achieved, then you're out, right? And this one is an example of a setup where just avoid entering immediately after the breakout. Wait for a retest and then consider the premium and discount zones. For the ones who want to use a Fibonacci, let me just get a Fibonacci here, and we get it clear. You see how the price action and the retail concepts, you can bring them closer to using, you can bring them together or put them together with smart money concept and work better. So I'm going to use a Fibonacci, and then I take the move from, I'm considering this move here. I take a Fibonacci from down here all the way up here. And for me, because mostly I'll use a smart money concept from my entries, look at how it went. The price pulled back all the way to around 50%. Then that's where we got an entry to the upside. So this one, you will find a buy around, let me use something to mark. You will have your buy around this area. right? Buy around this area. So once you buy here, then of course, you have your stop loss just below. You see, we had a low, we had a candlestick here, right? This pin bar around this point. I'll have my stop loss around this area, SL, and look at the risk. That is the risk for that trade. And consider the reward. There are multiple times all the way up to that level. And that could have been a very nice trade. As compared to someone who entered at the break here, then you're putting your stop loss at this area, which could have been, the trade could have come out proper, but look at the risk all the way from an entry of this area all the way down here. Look at the stop loss amount, right? And then you're waiting for this pullback, and then you have to wait for the price again to move all the way up. Okay, you're getting a good reward as well, but look at that risk. And that's what you're trying to avoid. Want to get sniper entries. This is for New Zealand USD. Let me look for another example that we can use in this case. And of course, after this example, we'll have Zainab, you could be looking at the questions which you have, and then you will send them over so we can consider them. So let me just look at the next. Please, if you have questions, post them here. Post the questions here and we will respond. If they are related to the smart money concept, that one will be best. That will be the best. I want to get as the next chart. All right. So let's check for at New Zealand USD and see as a good look at as a good setup as well. So here we are. Remember, it's always good to analyze this market from a higher time frame. So let's look at 4 hours. And for example, this strong downward move, how could you have entered this trade, this strong downward move with smart money concepts, right? Or even probably currently what's happening there. But first, let's try and understand how I could have gotten that move. Now, here we have a market structure that is getting higher. We have higher highs and lower lows, higher highs and lower lows. So from this point here, we've got a very strong, these are low, but a very strong run to the upside. Then right at this point here, I don't want to get to a history where we're also looking at another, and well, it's like these parts are all over. They're all over. So let me choose to do this. So we have this price, it's trending upwards. We've got successive higher lows, like here we had a low, another low here. And also on the upper side, we have higher highs. It's a high point. Let me change this one into either blue color so you can distinguish them. So lower, it's a low, then this high, then we've got a higher low here. Looking at what is it? This is a higher high. Then of course we have got another higher high next here. So this is a clear uptrend up to this point, and then we have the market stretching all the way up there, right? So in such a setup, you're looking for a change. It's called change of character. Simply, the character is the flow of the market. So before all this other part of the market happened, which let me just mark it in, let me mark all this area. Before all this downward move happened, all these are marking in gray. Before all this happened, how could you have gotten a signal to enter, right? So looking at this higher highs, higher lows, and at this point here, we have the price breaking again and forming a very high point here before breaking again and forming a higher high. So right at the top, you're looking at clues that this price might be changing the direction of the character. And here we have another higher low, of which after this, if you consider the market structure, it is such that the price moves higher and then it pulls to the downside this way, making a higher low. If you allow me to move slowly so that you can understand the concept, the price moves higher again. And there is a low we didn't mark here, but it was broken sometimes. Then we have the price went this way, strike, was about to strike another high. This is what we call market structure. This one broken to the up, to the downside, but did not maintain, right? So went up again, all the way high, and you can see how we're getting the market structure, right? This is an uptrend market structure, or market structure for an uptrend, and then you see you have a low here. So what we're expecting, if this one is a strong uptrend to the all the way, then we should have this to the downside. Then the next one should come and break the previous high, which is this high here. So this level should be broken for us to believe that the uptrend is continuing. But then what happened? Instead of this, we had the price forming a lower high at this point. So once it formed a lower high, we have again another scenario where the price does not maintain the previous low and it breaks that low right at that point there. And this is what gives us an idea that we are expecting a downward move. So this is what we are saying, that the traders who use the retail concepts only, they will enter immediately after the break at this level. But look at how the price moves again to the upside. You see, there are situations where you have the price moving all the way up, and then gets the momentum to the downside. Remember, this is 4 hours. So traders are looking for entries that are a little bit less risky. So the situation here is that we have the price pulling back again to the 50% level, right? Pulls back again to the 50% level, and then we have an entry to the downside. For the guys who use Fibonacci, then this is where you'd have it. This is the move that you're going to use in this case, right? From here to here, and you realize right at the 50% level. And I see someone mentioning FVG and liquidity Apollo. So at this point here, actually is where we have there's some fair value gap around this one. There was a very strong downward move then before the price pulled back a little bit, so that we have that one filled before another strong downwards, right? So fair value gap is where you have the market. There was a strong selling such that the selling orders, you don't get matching buy orders, right? At that point here, we have the strong candlesticks. Okay, so how could smart money concepts help you? How could it have helped you to find an entry for you to ride this move downward? So you simply ignore the first breakout, wait for the price to retest, and then you can have your entries filled either at the 50% level or even at the 61 or 70% level, right? That one now you have to refine on lower time frames. Let me mark this area. We see how you could have gotten that on lower time frames. Remember the concept of analyzing the market top down. It is always valid. It's always the best. So if you go to a lower time frame and go back to that area, I don't know whether the chart will allow us. Let's try to move there. And it's very, very clear now for us in this case. Okay. So for those who understand fair value gap and where there has been strong selling and there has been a gap there. So the price can either go back and get the momentum to the downside exactly once or at the place where it feels the gap. And that's exactly what happened at this point on 1 hour. Go to 30 minutes, it can even get much more clear. So for the guys who got an entry right at this point here, right? Let me highlight with a drawing. Those who got an entry here and they sold, yes, there was some profit here. Those are breakout traders. But after that, they look at the pullback. Probably they had their stop losses around this level and it was taken out. SL around here, it was taken out, right? If they didn't take the trades early. That's a little bit riskier. So these types of traders, these breakout traders, they will have their stop loss a little bit further, a place like this. Those are the ones that will be safe. But when you involve the smart money concepts, then this will help a trader to find a very nice trade, and they are called sniper entries. For the ones who know, you have, sorry about that. You have the trade getting filled. Let me get it back. I have to go back to 4 hours to get that back. All right. Sorry about that. What am I looking for? So you have the trade filled out at a very good place, and then a very fast move to the downside. For example, for the smart money concept, you just have the trade field around this area, or even it's around this area, and you have the stop loss at the top, and right after that, it didn't take long before you had the price running all the way down, and then look at the reward to the risk. The reward to the risk is awesome. Yeah, the reward is awesome. Right from here all the way down, this could have been quite some good pips all the way down, even as compared to what the breakout trader could have gotten here, right? The smart money concepts trader got it here, and it was all riding down the trend all the way down there. And that's what we're looking for. So those are just 2 examples which should show us simply, as a smart money concepts trader, it's also teaching you to be patient, right? Don't be a reactive trader. After breakout, you're entering the trade. And by then, you know what? The breakout trades are like the best, right? But then you need to be patient enough, wait for the price to pull back, and then understand some other concepts like fair value gap, understand concepts like liquidity and order blocks. That is going to help you now in finding the best entries. Today, I just wanted to show how you should not just apply the breakouts without knowing where are we likely to have the big boys filling in. And that one, you have to use the market structure. So I think with that, those 2 examples, I think, hey Zaid, you can show us you can just give us a few questions that you have from your end.
Yes, Matthew.
Yep.
We have a few questions. Yes. So the first one is from Michael Mulwa. He's asking, when trading on a 1 hour time frame and a candlesticks break a key support or resistance zone, must you wait for the 1 hour retest candle to close? That's the question from Michael.
Okay, nice one, Michael. Good question. So I would want to answer this one with the multiple time frames trading or top-down analysis. Where you're using a higher time frame, then you're refining your entry on a lower time frame. You do not have to wait for the 1 hour time frame for confirmation, right? So once you find a break on a 1 hour candlestick, so on a 1 hour time frame candle, then you can move back to around 15 minutes, because mostly you see that the recommended time frame combination is 1:4. I don't know where that one came from. I also use it. So if using 1 hour, just go like 4, like go down to around a time frame 4 times lower. If it's 1 hour, it's 15 minutes, right? If you're using 4 hours, just go to 1 hour. So you found your candlestick, you have a break on 1 hour, then because you don't want to wait again for another 1 hour, you can move down to around 15 minutes and try to find the structure which is forming there. And then as well, you have now to look at the market structure and apply the same concept where you have a break, then wait for a retest, and that will give you a better entry, Michael. Thanks for that.
Very well. The next question is from Apollo Nderito.
Oh, okay.
He wants an explanation on what a change of character, break of structure, and a consolidation area in reference to taking a trade using the smart money concept and interplay between the higher time frame and lower time frame. So you can marry this with the money objectives.
All right, good question. That is so higher time frame and lower time frame. It's exactly what I've explained to Michael, but then about choke and break of structure. Now, that's very nice, by the way. So let me try and show that one. I think on the chart will be good. So, but now we have to look for a different chart and try see what we can get. So in this one here, for example, here we have on 4 hours. This is nice, by the way. So I hope you're with us, Apollo. Yeah. So in this case, when we talk about choke is change of character, or choke change of character, it is simply what we call break of a trend or change of trend. If you look at this one here, for example, before we have this upside move, what I'm seeing here is this trend. So when you had this break right at this point here, let me use a drawing. Right at this point here, when you had the price changing now to the upside, this is what we call change of character. For us, it's a break of trend, but in other terms, in smart money concepts terms, it is change of character, right? Now, change of character happens when you have the trend changing from a downtrend to an uptrend. That's a change of character. But break of structure is where you have, it happens mostly in a trend where the low points, like this is the low, then it's broken at this point. So this is what we'll call BOS. BOS. So break of structure is what confirms to us that that downtrend is still on and it's valid and it's keeping on. So this is another break of structure here. So break of structure makes us believe that we are still in a downtrend. The next one, we have another BOS at that point. And after this one, again, we have another BOS here, right? So all these are BOS, and here we have BOS. They happen where the structure, where the there's an uptrend, or the trend, sorry, where there's a trend, it's a downtrend which is still happening. But now at this point, look at it. There's no break of structure here, right? The price actually just went down and did not break this structure, just tapped into it, formed what we'd call like almost 2 equal lows, right? 2 equal lows. But then this one makes it clear. I hope it makes clear what the choke, what the break of structure is. But now let's look on the upper side as well. We have this is the high, this is a lower high, another lower high, another lower high, which of course goes in line with the break of structure to the downside, which are lower lows. Now check how at this point the lower highs, the highs are maintained before we have a change of character here. So a change of character is where we have the price breaking the previous levels which have not been broken, but now on the confirming a change of the direction, right? So this is what we call choke, change of character, right? I don't know, choke. Yeah, that's a change of character now at this point. So once you have this change of character, this one indicates that there's a likely, this is what we call a break. It's a likely change of the direction of the market to the upside. So this is what I am saying. For us who trade only, this is on 4 hours, remember? And now we'll apply it to your higher time frame and lower time frame. This one is on a higher time frame. Now, if I remove all these drawings here, so you can move to a lower time frame because they won't work well. Let me try use the lines here. So this is a break of a trend, yes. So at this point here, once we had the break of this, remember this is on 4 hours. So if you enter a trade here and you're looking for a place to have a stop loss on 4 hours, if I zoom clearly here, you find that even one single candlestick, if you put your stop loss around here, or maybe to this low, because technically you want to have your stop loss around a technical barrier. So if you enter, for the guys who are waiting for breakouts, enter here, buy, and then you have your stop loss, the best area will be here. That's already 100 pips, because unless if you decide to put it on count the number of candlesticks, maybe 2 candlesticks or 1 candlestick, you will find your best stop loss area here. Then that's a big risk. And of course, if that's 100 pips, even if you had a good run, that would be around 150. You're getting one is to the risk reward is not quite high. So that's why then my friend Apollo, that's why you need to move now to a lower time frame. Around once you find a break of the structure, then let me mark this area so we can move to a lower time frame and see what we need to look at here. So shapes, I'll highlight this area, right? So we want to go to a lower time frame, see how we could have identified a better entry. So when you go to the lower time frame, you want to find a better place for a stop loss, right? And of course, better, higher reward. And mostly you will find that, you see here we have a small pullback down into this area as well. And here we had a push to the upside. And then of course there's push to the downside. There is some form of market structure forming here. That's what we want to identify. So this pullback to the downside, then you're looking at this 50% level here, mostly. That's where we'll find our entry, just like you can see here. So if you go to around 1 hour, because now we use it in multiples of 1:4, that's what I mentioned. So move around to 1 hour, even to 15 minutes to give us something. So again, we had very nice break of this, which was the level, this level here. There was a very nice break. So someone who entered here got in up to this level, then there's a pullback to this area. So what we are saying and how you'd go to a lower time frame is you've gotten your signal on higher time frame, that is 4 hours, there's a break at that point, then go lower so you can refine your entries. And in this case now you can find there was even another pullback here which you didn't get. So look at this. There was a retest here. So things become a little bit fine. So let me leave this one because we found the red lines, we've drawn them on the higher time frame. The blue lines, sorry, let me use red lines so we can now refine it better. If you go to a lower time frame, you can even find there were other smaller structures forming. Like, let me use I will just turn them to red. Let me turn this one to red. And we can see now how we can refine the structure on lower time frame. So here we have a move to the downside up to this point. We have another just within the downward move that forming there. We have this one here before you have again another strong to the upside. And this is what you have: the first 3 tests. The price pulls down, pulls back lower, and then we have a proper break with this move to the upside. This is the move, this is the break which we could initially see on the 4 hours with just this one single candlestick. I don't know whether you can see that with this single move that we have here, right? But if you go back, you even have a smaller, this a little bit of a pullback. So when you go to a lower time frame, if actually we are looking for an entry, then we will have even a smaller distance for the stop loss, and that's what we're talking about now. But then, before you look for the stop loss, then we're considering this whole move. So there's this low point here. If you're looking for a stop loss and for the smart money concept entry, that's where you'll have your stop loss. If you had entered your trade on 4 hours, remember where you could not even find anywhere to have your stop loss. So you had to look at it right below here. So on 1 hour, so you go back here, there's a pullback to this area. Remember now you're using the premium and discount areas. And in this case, you have a Fibonacci, you getting this move all the way up here and right at around 50%. 50% pullback. I don't know where all of them are coming around 50%. I'm not saying you should be using 50%, but there is some form of confluence around there, some form of repetition. Right at this point, that you have some very strong moves to the upside, and look at it. And if you want to consider it clearly, we have an order block at this area here or lower time frames. You can as well refine this one on lower time frames. But as you got the trade here, you will have your entry around this gray area at that point. Let me mark with let me just do it if you allow me. Right, yeah. You just have your buy. Even if you had your buy right at this point, you have your buy here at that area. Once you have your buy, and then you have your stop loss around this area, you have just a few pips for the stop loss, because this will be your SL. And then look at how the price springs up to the upside, and a little bit of rest or a consolidation, the price goes up again. And this trade here is much less risky than the first trade which you entered here, and you had the price pulling back up until traders give up. Imagine you buy at this point, you buy at this area, and then after some time, then the price is pulling back, and it seems like now it's on a downtrend. You just get bored, you get out, and then the smart money guys get in and they ride all this upside. So I hope I've answered that question that Apollo had raised, right?
Yes, Matthew. Thank you so much.
Right.
So the next question is from Soga. He's asking if you have a video on trading with COT. Commitment of traders.
Yeah. So I think we've not done any video on the use of commitment of traders. I think it's something we need to note and bring forward to a presentation. Zainab, what do you think? Yeah.
Yeah, that's a good idea.
Yeah. So thanks for the suggestion. Yeah, thanks for the suggestion. I think we can prepare for the commitment of traders, COT. It's a report which shows the open interests and net short, net long positions, and what are the movements. Simply the net interest of the non-commercials, right? There are those things. I don't want to drop those terms here. We can always look at them. We can prepare and look at them. Thanks so much for that suggestion. Do you have any other questions from your end, or I can find some from my end as well?
Yes, I have a few gold traders or lovers here with us. They are requesting we analyze the gold.
So let's look at gold. I think I may not be the best person to do that analysis. Actually, we have our market analysts, Rufus Kamau, who does that one, our market outlook every single day at 11. So I would prefer that we attend that session, but I can try look at whether we have anything like I see something here. If you have anything that I can explain our topic for today. So here we are. I don't want to, I'm not suggesting there's any trade, but look at this. On 1 hour, let me use 1 hour. On 1 hour, we have what type of a trend? We have a downtrend here, but let me mark using the market structure. And the market structure here is such that we have this high level, and then we have lower highs here, and now it's another time to practice what Apollo was asking. So break of structure at that point is high level here, lower high, then we have a break of structure here. So when that one changes, then we start suspecting what might be happening moving forward. These are not quite clear here, but I see we have another structure here which was a little bit broken a little bit, but then price pulled again to the upside. But then if we move lower that way, this is gold, right? It's on 1 hour. There was a break of that structure there to the upside. The price pulled down a little bit, took it. But if we want to play by the bigger structure which the market is making, it's not actually broken this key area here. It's gotten stagnated around that area. So if we had a proper break here, this is on 1 hour. If we had a proper break here, then we could be considering that we look for entries below the discount or on the discount area. But for now, it is failing to break this, unless if we look at it on higher time frame on 4 hours, of which again on 4 hours there is no proper. We have a break of structure here. It's kind of agreeing with what's happening on 4 hours, is agreeing with what's happening on 1 hour. So we have got lower highs, lower lows, and let me remove this part, this small line here, which is distracting us. You can see properly. I hope. Oh, Shali is here. You can see that this high has not been properly broken, and I can't rely on this level here. Actually, it's not even good for now. So I need to see a break of this structure here. So right from this, what we are expecting is another downward movement. That is, if we keep by this market structure of lower highs and higher highs, and then maybe we expected something else like an upward move. So if we have this one broken, then that's when we start thinking of what's likely to happen, right? So if it doesn't, then of course we keep on with this channel, right? Trading within the channel, and of course here now you can move to how you can apply order blocks when you're trading in a channel is just use the move which is happening, and for example this move here, sorry, the along the trend for the continuation, pull your Fibonacci along that. If this is a move, then you're looking at entry around 50% or mostly 61.8 in line with that trend. Then you can find your entries, something like that. So maybe you can speak about how to trade in channels with the smart money concepts. But for today, I was looking for breakers. Initially, what had happened, this is something which is like a break. I don't want to focus on so much on the gold, but this is what I can see for now, my friend Charlie.
Thank you so much, Matthew. We have another question from Apollo still. Explain the fair value gap and liquidity, order blocks and their types, which is the best one to take a trade, and what's big brother, small brother concept. So I think you mentioned a bit on the fair value gap and liquidity and order blocks, yeah?
Yeah, I mentioned this one. I mentioned that one.
Okay. We move on.
I think I mentioned most of those terms. Fair value gap is like the gap in the market. Liquidity mostly is where you have the stop losses resting, where you have most orders resting, sell stops. What happens for the retail traders, or even for most of the traders, where there is a break, most of the guys, or where there is a resistance, most of the guys will have a lot of orders waiting there, buy stops waiting there, such that when the price springs or breaks past that area, then they are absorbing the orders very fast, moving to the upside, right? So that's where we have a lot of liquidity. We have a lot of orders around there waiting to be executed, right? Maybe you can also look at those ones again in the future to avoid mixing, to avoid talking about so many concepts all at once. But thanks for the question. That's nice.
Now we have another question from Peter. Hey guys, can you explain on how to determine major demand and supply zone from those supply zones that appear just during the trend? And can you please explain on liquidity gap and how to avoid it?
Okay, so that's, I think it's liquidity grab. Right?
Yeah, sorry.
How to avoid it. So supply demand, that's all we're trying to find all along in this market. So supply is where you have a strong selling. So if you want to find supply zones, for example, looking at this gold chart, supply is most likely going to be at a point where you have a very strong move originating from or starting from. For example, here, let me try a mark here. Mostly, and you can't know exactly where that supply is, but you can try find it using the moves. Do you see this move here? Quite a very very big move to the downside. So who do you think is causing this very big move? It can't be the traders who are putting 0.1 lots and 1 loss and so on. And this is a big trade which is causing this move, and you can see just less than 10 candlesticks causing a very big. How many dollars change from 1956 all the way to 18? So imagine that dollar move around a 5% change, right? It can't be a small amount of money. It's a very big amount of money. So what you know is, since you have a very big move originating from this area here we have a supply zone. So whenever the price comes back here, there's a likelihood of the price reacting again to the downside. So if you want to know where we have a supply or demand, then look at where you have a very big move coming from, right? In this case, if we zoom in this chart, right, and look right below here, this is a gold chart. Where you have a very big move coming from, for example, let's look at this part here. You have a very big move coming from that region. So likely that's going to be, it's more of a demand zone. That's how you will know, right? So whether it's big, then it depends with how big was the move. For example, the supply around this top part, which I've shown here, is much more bigger than the demand we're talking about down here, right? That's how. Maybe you can also, because another concept you need to look at much more deeply, maybe you can also repeat it some other time. Yeah, so from my end as well, I have a very interesting question for you here, Zainab. Someone is asking, where are our offices in Isli? And you're the right person to answer that one.
Yes, Michael. So our office is located at Al Mukarram Shopping Mall. We are at 4th floor, office number 5. So Monday to Friday, you'll always find me there. So welcome, guys. Yes.
And I'm in Nakuru as well. You want to find us, just come to Nakuru Tower 1. And we have got our office also in Thika, Kitengela, and Eldoret. Come and Westlands as well. Visit us and we can discuss these things one-on-one. And for the interest of time, I see you have questions, mostly on analysis of US 30. We have a question on US 30 and fundamentals and crude oil. Thank you so much for those questions, Peter and Annette. But I would want to request you, if we get this one from our market analyst, would be the best. And that one happens every single day. You get the updates every single day at 11 a.m., right? So 11 a.m., just where you're watching, where you tuned in for this training, right? For this session, join in tomorrow, 11 a.m., and you have Rufus informing you. Actually, looks at the economic calendar, those events, and that's where you can get all the fat.
Yes.
And
so
I think, yes, please.
Yes, just put your alarm, guys. 11 a.m. daily, you will find Rufus.
Sure. And by the way, you can even put the reminder, just set the reminder, and you can get a notification that, hey, we have this webinar starting, and just join and get those fundamentals, right?
Yes, as we always say, always keep up with the market, yeah?
All right, just always keep up with the markets. And thank you so much, guys.
Thank you so much, Matthew.
Thanks, everyone. Bye.
Bye.